There is a revolution in the retail payment, but what about corporate payments? How are banks and financial institutions using digital tools to make corporate payments seamless? This fireside chat will deal in how Bank of America is innovating and leveraging digital tech to help corporates manage their finance and payments in a better and efficient manner. I would like to invite Amol Dethe, editor ETBFSI, to moderate this chat session. Over to you, Amol.
So, hello and welcome to this panel discussion on technology and AI changing the landscape of corporate payments and finance solution. And I have with me Shankar Subramaniam, the MD and India Head of Global Transaction Services, Bank of America. Shankar, welcome to the show.
Thank you, Amol. Great to see you again.
Shankar, to begin with, we have been talking a lot about the retail payments in the country, and we have seen a big boost in the retail payments. But could you also tell me, what are the major changes that is happening in the corporate payments? How are you actually onboarding your customers and executing the corporate payment solutions for them? What are the changes are you seeing there, and also what are the challenges are you seeing there?
Sure, Amol, and you're right. I think what we're seeing has been and all the developments in a fast changing market like India primarily have been on the retail space. You and me, when we make our personal payments, obviously we've seen significant changes and improvements. And what we hear from our corporate clients is that they're looking for something similar on the corporate side as well. So they want the same seamless features that you typically get in a retail banking app. Now that's obviously easier said than done from just given the kind of controls and the corporate requirements that would typically be there in making these kind of transactions. Now you alluded to onboarding, which is obviously the first step when a bank is kind of working with a corporate client. And you're right that India historically has been, when you look at the KYC process, has been a very document heavy process, right? Where you collect physical documents for almost everything. I think this pandemic, while there was some amount of work happening before, I guess the pandemic and I guess the long-standing nature of this pandemic has made it very relevant for banks to change the process, look at options. And I think many banks, including ours, we have now come up with a digital KYC process where even RBI now allows a video KYC or an eKYC model to be adopted. And we have leveraged on that, leveraged on the fact that India has a very robust digital signature certification, set up in place through various agencies like eMudra and so on and so forth. So what we have done is that, things like, for example, a board resolution, which is what a company needs to provide a bank when they're opening an account. Clients can now send us, a copy of a board resolution digitally signed by the relevant authorized signatories over a secure mail. And we are fine to accept that. We don't really need a physical copy, right? In some cases, there are some documents where we agree that, okay, in the middle of the pandemic, obviously we cannot expect clients to send the originals. You can follow it up with the originals once the situation normalizes, where a digital version might not be acceptable. If you kind of you kind of have moved almost the entire onboarding process digital. That's step one. Then you move on to step two, which is obviously where you sign your customer agreements, get into that documentation for a payment and stuff. Again, leverage the same logic, digital signatures on those documents. Client signs off, confirms it to the bank on a secure email communication channel, which can be established between the bank and the corporate. And pretty much you're pretty much done with that process as well. And in effect, the customer can actually start dealing with you immediately after that. So you take care of the onboarding step one, kind of move it into a digital environment where feasible. Step two, obviously, is the transactions. Now, almost all banks, fintech providers, they have a front end platform now, right? And it is now about making that front end platform, as amenable to the client as possible. Set up host to host connectivity. APIs are, of course, now the recent development there, where you can easily connect into the the corporate's mainframe and get the data that you require to do the transaction. So those put in an API call and you're pretty much sorted there. So I think those developments that we have today have made it significantly easier for corporates, and I think there is enough work that's still being done to kind of make it even more simpler and more seamless for the corporates.
Okay, noted, Shankar. But if I look at specifically the corporates now, you have been offering this, using this data and offering this lot of solutions to the, to the corporates. My question to you is, what are the major demands from the corporates in terms of payments? What are the solutions they are looking for?
So two or three things I would say. Primarily, obviously, it is a tough time for corporates as well, right? While obviously the banks are having a tough time, but so are corporates, and they've gone through a phase where collections were significantly impacted. They had to take a call on which payments to execute in the middle of a tough situation, which vendors to pay out for, which suppliers are actually committing to supply, and so on and so forth. So a lot of time and effort corporates have been spent is on forecasting, and a lot of demand on forecasting models, right? In ability to kind of skim through the data for, let's say, the past 6 months, for the past 1 year, and give models to the client, which will give him an analysis of how much cash does he need to hold, so that he's in a comfortable position, even if, let's say, X percentage of his customers are unable to pay for a certain reason. Likewise, in terms of his payment model, like which customers are paying on time, which customers are necessary are for whatever reason delaying their payment, and how does it impact his entire cash flow model. So a lot of time corporates do ask us for cash flow modeling platforms. Now there are platforms. Again, I'm not saying there are a lot of fintech vendors which provide it, but there is still significant room for improvement on that. Bank of America ourselves, we are launching a cash flow forecasting model, which should probably be launched early part of next year, where we are using machine learning. We are skimming through the data that the client transacts through us, to kind of give him potential situational analysis, which he can then work on, tweak on, and come up with his own analysis in terms of how to manage the cash balances. And I think one important aspect here is the benefit of open banking, right? That's also another concept which is catching on quite aggressively. But how that benefits in this situation is that the cash flow forecasting model is not just restricted to his accounts with one bank. You actually can allow him to access his entire bank setup with multiple banks, and then give him a forecasting model across the flows of those banks as well. So that is another good development, which is allowing banks to kind of cater to the requirements of corporates.
Okay, that was again valid point. We are still, we are talking about the vaccines, and there is, we are closer to the revolution that is going to happen. But the challenges are more, in fact, going ahead still. But what are the learnings that we had from 8 to 9 months, and the massive adoption of digital that has been happening in the banks? How do you see the corporate payment shaping up in next 6 to 12 months? Do you think that from A to Z, or 1 to 100, everything will transform specifically in the corporate payments digitally?
I think so. So you're right. It has been, I guess one important learning that at least I take back from this whole process has been, banks have BCP processes, right? And the bank's BCP processes are typically such that the bank is not able to function from its premises or any such situation. I don't think a BCP process is solved for the bank and the customer not being able to be in their respective premises and transact. So that is surely a learning that needs to be taken on board. When we build our BCP processes, we need to also factor in both elements of it, right? You've always been looking inward and saying, okay, I will not be able to work from my premises for whatever reason. How am I set up? Do I have a back office in a different location which can take over from there? But I don't think we have looked at both ends of the spectrum, where the customer himself is not an office and he needs a solution despite that. So that is surely one lesson learned. We need to build up BCP processes to capture that aspect as well, which I guess we've learned now, and we've all developed solutions around it. But probably something more robust would be relevant.
Okay, thanks for that note, Shankar. But my question to you specifically about data and AI. Most of the banks and the financial institutions are aggressively using data and AI, but still it's not segregated, still it's not integrated. So I would like to ask you, how accurate are your decisions? Because data is still not in shape.
So I think I can try and explain that by giving you an example. And I think the best example is what a lot of banks do is use their credit card data. Credit card data gives you, and we did that, for example. We are not that big a credit card player. We are a corporate card issuer in India, but if you look at our US operations, where we are one of the largest credit card issuers, right? We use the consumer spend data to identify which segments we're going to see a faster recovery compared to the others. So, for example, if I'm in the US and I see that restaurants, consumers, as the I guess the lockdown started getting lifted, where were consumers swiping their cards? What were the consumers using their card spends for? Was it to buy technology products? Was it to buy kind of get food? Was it potentially for future holidays that they were looking to book at that point in time? And that gave you extremely good insights into consumer spending behaviors, which obviously led you into certain decision making about certain sectors in terms of which sector do we see coming back from the pandemic fairly quickly, which sectors do we see a slightly delayed return to normalcy. So that is just one example of how you use card spend data to make an analysis or to come to some kind of a conclusion in terms of sectors or areas that you feel will recover or possibly will take a little longer to recover, as the case may be.
So I'm so sure that for you, taking decisions would be really faster, considering the data analytics is in front of you because everything is visible. But my concern is also this, that the data which is generated most of the times is not an accurate data. Most of the times there is so much data also. So segregation of data, integration of data virtualization are the major challenges which many financial institutions are facing. One, how are you dealing with it? And second is, how accurate your decisions are based on this data.
Yeah, so you're right. I think that remains a challenge, no doubt about it. I was just reading an article which said that data generation now is happening every 2 years. About 5 years back, you were doubling the data generation every 6 years. And now it's moved to 2 years. So that's the kind of speed in which additional data is getting generated, and that gives you a perspective of how much data is out there. And you're absolutely right. The toughest job to manage data is to manage data. Basically, is to get insights which make sense, insights which are relevant, and you're absolutely right, which are correct, accurate. And that is a challenge. So what the bank has done is that globally we've got a data analytics team which kind of keeps analyzing various modes of data. They keep breaking it down, and I would say that at this point in time we are probably not taking decisions exclusively based on data. Data is obviously one of the resources that I would use to arrive at a decision. It's not the only resource, and it's not like an automated thing that, okay, a particular collection segment we're seeing let's say moving away from 15 days to 30 days, that means there's a challenge there, and cut all the limits to that particular sector. You would not take those kind of calls just purely based on data. But data is surely a source that you use to kind of arrive at those decisions, right? And you use all sorts of data. It's not again restricted to one source of data. So you use external data sources, you use your own data sources, you combine that in whatever form and shape. So I agree with you that probably the biggest challenge is crunching it and making it in a legible form, and obviously back testing it, right? And that's exactly what our data analytics team does on a regular basis. The back testing becomes extremely relevant for accuracy, because if you can kind of prove that the model has worked over let's say the last 3 years data, then you have more comfort that it will continue to work, right? There's no reason why it suddenly should start showing inaccurate results. So I think it's a combination of that. Banks are getting their head around it. I think a lot of banks have developed necessary software and necessary technology to kind of be able to sift through the data and come up with models that kind of are relevant and kind of what clients probably can use to their benefit.
Okay, sounds good. But one more question I would like to take here specifically on the solutions part is that, I mean, let me put some thoughts together, not a direct question. So at one side, the banks are going very, very risk averse in terms of disbursing the loans. They want to judge each and every borrower because they don't want to trust on the past records, but wants to see how his future is going to be. Point number one. Point number two, borrowers are also looking at banks very seriously because they also don't want to borrow too much. In this particular aspects, how the technology is going to help you. Obviously, data and AI is one part, but how are you actually putting your fundamentals into it and trying to give a better solution, because this situation is going to last at least for a year.
No, fair enough. So you're right. So I think obviously banks have also, for good reasons, I guess, are adopting a generally a risk-averse strategy, just given the current situation. You need to be very careful. And you're right that the corporates also want to be extra careful, just given the situation, and they don't know how things will pan out for them, right? What is there in the market today might not happen tomorrow, and it could worsen, it could improve, as the case may be. So I think again, it's a combination. So one of the ways that we do our analysis is obviously we do a sector analysis. We when the whole pandemic hit India, we kind of did we kind of obviously have sectoral limits depending upon the the corporates, I guess the impact, the corporates that are based in which sectors, right? So you'll have oil and gas, you have metals and mining, you have specific sectors, consumer goods as the case may be. So you basically then delve into each of these sectors, see where do you see the biggest impact. So we've done that analysis based on estimations. Obviously, at that point in time, it was only based on estimations of where for example, the immediate impact of COVID was going to be consumer demand just drying up, right? And so which sectors are directly impacted by consumer demand? For instance, FMCG companies, right? You obviously will then wonder whether what kind of FMCG companies are impacted, how much of their cash flows will be impacted, because consumer demand is pretty much disappeared for almost a month or so, right? And then you take those decisions based on that. Then you do the forward-looking analysis that, okay, and you do that on a continuous basis in a situation like this. You don't do it once and then you just sit on that data. You basically look at the situation on ground. Let's say now, we are talking about a potential vaccine. So yes, things are expected to improve. If the vaccine does come, let's say in the next quarter or so, and then let's say 60-70% of the population gets vaccinated before the end of next year, then what kind of an impact will it have? So these are obviously estimations. Obviously, you have the benefit of credit rating agencies and a lot of other agencies who do similar kind of analysis. You reference that data, and then you come up with your own conclusions in terms of which sector are you comfortable with to advance, take more exposure on, and which sectors would you want to kind of probably adopt a wait and watch approach, right? And then, of course, you're absolutely right that the corporate should also in those sectors should be interested in any kind of borrowing depending upon the situation. Right now, if you look at the India market today, it is so flush with liquidity. Corporates probably are not really coming to banks to borrow. They have the CP market and so many others where there is enough and more liquidity available. So even corporates will make that choice, right, depending upon the cost of funds, cost of borrowing, and stuff like that. So it is when you look at it's probably a more challenging environment for the mid market, for the SMEs, and I'm glad that the government came up with schemes where they were guaranteeing the loans to MSMEs and SME companies, right? And I think that was very relevant because those would be the guys who cannot tap the bond market on an active basis. They were dependent on bank loans, and if banks are averse to lending to them, then where do they go? They really don't have too many alternatives. So I think that was very relevant. So it really is a mix of all these aspects that you build into your modeling, and you come up with an analysis in terms of which sectors work, which sectors you would probably adopt a wait and watch approach and take a decision based on that. So and I think what is probably again very relevant is that you need to be kind of flexible about it. You need to be kind of quick and keep reviewing sectors so that you're not stuck with an old review or an old analysis which probably is not relevant anymore, just given how fast the information on the vaccine and the lockdowns and customers coming back into the market is happening, right? The change has been very, very fast now. You just look at automobile demand in India. You probably 3 months back were worried whether there would be any sales, and now you saw Maruti recently mentioning that probably they're just talking about a 5% reduction in their annual sales for this year. It's a phenomenal turnaround in what, 3 months, right? And 3 months back, if you had asked me whether I would be comfortable lending into the automobile sector, I would have obviously said, I'm sorry, I think a wait and watch is probably the right approach there. But today you might actually be very keen to kind of take exposure in that sector, just seeing that the demand has survived the festival demand and it still remains robust. So that is just one example I'm saying, and that's why as banks we need to be on top of how consumers are behaving, how companies are behaving, what's happening in that specific sector. Take those data trends in and then take your decisions in terms of expanding or pulling back your credit exposure.
And okay, noted that. But just before I let you go and before I wrap up, maybe one important question, not specifically about the conversation that we just had, but on a personal note, imagine in next 1 quarter or maybe 3 to 6 months situation will be normal, and everything is fine and we are vaccinated. What is the first thing that you are going to do in the normal world?
Well, tough one. If we are getting to that, I haven't really thought about it, to be honest, because it just seems so far away and you don't want to spend too much time thinking about it. But I guess the first thing you're probably going to do is go to one of your restaurants that you really like and have a meal without being worried about who's coughing next to you or who's sitting next to you. So I think to me that's an important tick box.
Right, I think
Not
we
a big
all have
ask, a
that.
simple ask.
I know that has become an extraordinary answer now, because you're all
Absolutely.
looking forward to it, right? So,
Yeah.
but great. So, thank you so much, Shankar, for taking part into ETBFSI CX conclave and sharing all those insights. Thank you so much.
It's a pleasure, Amol. Thank you for the time. Thanks a lot.
Thank you.
Thank you, gentlemen, for touching every aspect of the topic. With this, we'll take a short break, and on the other side of the break, we'll meet for ETBFSI Excellence Awards 2020. Stay tuned for more excitement.